So on Monday, oil prices went negative and oil traders were paying oil buyers to take up contracts that they didn't have storage space lined up for. And so yes, guys, that means that people were paid to buy oil. And if you're part of any investment discussion, the main topic right now is oil, and questions are what happened here, what does this mean, and if you're an investor or speculator, a few other questions that you may have are, what's going to happen next, and should I be investing? Well, let's get into it. Hey guys, welcome back to Money Talks, and if you're here for the first time, thank you for being here. Smash that subscribe button and send us some love by liking this video. So guys, straight into it without getting too complicated. The reason why oil prices went negative is because of economics, supply and demand, a fallout between oil producers, and a pandemic. Basically, at the beginning of this month, global oil production actually increased because of a fallout between oil producing countries. And then a pandemic came along and caused industries that need oil to pretty much stop. Airplanes aren't flying, people aren't driving cars. So what's happening is a lot of oil is now being produced, so increase in supply, and not enough people wanting to buy it, decrease in demand. And in simple English, when there's too much of something, an increase in supply, and you just don't want to buy it, then the price starts going down. Now, if you have too much of it available, and let's take an example. If you are making bread and you start producing a lot of bread in anticipation that a lot of people want to buy, and people stop buying bread, then you'll have too much bread and your price will go down. Increase in supply, decrease in demand. But what happens if you can't stop making bread and you keep producing that bread and you're running out of space to keep it? Eventually your price is going to go to zero and you're going to give that bread away. And if you're giving it away and paying people that don't want to take it, that don't have space at their places to take your bread, your price is starting to go negative. You have to pay them to take your bread. So that's literally what happened, right? A lot of oil being produced and then nobody wanted it, and then there's a problem of where do we store all of this, millions of barrels a day, and storage space is running low and prices went negative. And since then, since Monday, the price has recovered to around $14 a barrel, and investors are now asking the question, is this a cheap enough price to buy oil? I mean, if prices are that cheap, it might sound like a really good deal to buy now and wait out the recovery of oil, because surely demand will increase, surely it will all bounce back. And this comes of a popular statement by Warren Buffett when it comes to investing, very famous: invest when everyone else is fearful because it's cheap to buy. But let's take a step back and look at where that saying comes from so that we can assess what lies ahead and the opportunity that perhaps lies ahead or not. It comes from the concept of value investing, where you identify a valuable company with great management, good product or service, and solid financials that happens to be priced low in certain economic conditions. What it means is, as an investor, you do your homework and you identify and understand the risk versus reward, the certainty of this buy, and certain clarity when you look at the outcome of what you find. And it's at that point, when you find that value in a company, that you should be ignoring the noise, ignoring the fear, and buying into that stock, company, commodity, whatever it might be, based on your homework, so you can hold the valuable opportunity and watch your investment grow over time. This is where it comes from. Now, with that in mind, let's look at oil. Firstly, it's a commodity, it's a resource, it's a thing, it's consumable. And the only variable that drives its price is the demand for it and the control of supply. Versus a share in, for example, a cash-generating business in an innovating industry, like a tech company where its value can be derived from sales, its usage, its profits, and its share price can be determined by its perceptions, by its management, by its level of innovation, and not only specifically linked to the control of supply. Also, when we look at supply and demand mentioned so far, with a huge increase in supply and a proper drop in demand, there's no doubt that demand will return after people get back to life as usual and planes continue to fly and people start driving around the place. And the expectation from the investor is that the price of oil will increase. But between now and then, there's a storage problem which makes things worse. And some reports say that by mid-year, world oil storages can be full. And think about that. That's a couple of billion barrels. And surely a lot of oil production can't just stop, because many countries' economies run on this stuff. And to add to that, agreements to lower production and those types of discussions between nations and companies take a lot of time, and that just makes the whole situation a lot worse. Also consider that even when demand picks up, there's still an excess supply and storage that still needs to be worked through before oil producers can increase production, and so prices aren't just going to increase based on demand. And as an investor looking to buy oil at this price, you have to consider, how long is this going to really take? Which companies are going to survive without bankruptcy, and which oil companies are even worth considering? Also consider all the factors with oil price wars and commodity price wars of the past. As an investor, what price are you expecting at some uncertain future point in time for oil to stabilize at? Because now we are going to address the question that every single investor that's considering this should be asking themselves right now. At what opportunity cost? I mean, what happens if oil takes longer to recover than anyone could ever expect? And is it worth waiting for and losing out on the opportunity of other parts in the market, other industries, other shares that have such valuable opportunities to be investing in? And again, guys, I'm no oil expert, but it doesn't make sense to me. And I really believe that the question for all investors should be, where can I invest money, where there's value, where there's a good risk profile, with a certain level of certainty in a world today where a lot of value is showing itself. There's a lot of opportunity in these times. Where can I invest my money in a time when industries are advancing and there's great companies at amazing prices right now in these times? Where can I invest so I can take a position with my money with a diverse approach, with an understanding, with a strategy, ultimately to reach my financial goals towards living a life on my own terms? This is the question, guys. And that's all for today. I hope you enjoyed this video. Let me know what you thought about this video in the comments below. Thanks for watching, guys. Hit that subscribe button, like this video, and share this video, and I'll catch you guys in the next one.